You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music means it is Education Wednesday again here on the network. Time to dive deep into all things education. It is time for the premier educational program out there. Of course, Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hopefully, you folks out there, if you haven't joined the secret club already, you're missing out on some fun stuff. If you like the educational front, we had a great one on our pro Q&A session just yesterday, actually, with the last emperor himself, Mr. Constantine from Fidelity, who answers all the options kind of questions for you folks over there. He did it for you folks in the secret club this week as well, and it was a pretty fun session. Your questions are so wide-ranging and hit all kinds of topics. You guys are just lighting it up with the questions. Glad to see so many of you are enjoying. Of course, Friday, you get the second dose of course, options oddities out there as well after volatility views. So a lot of cool stuff kicking off there in the secret club, a.k.a. Options Insider Pro. You know where to go to learn more, theoptionsinsider.com/pro. If you like what we do all week and you want more in your ear holes, including exclusive content, these great pro Q&As. By the way, next week, going to be a banger on the pro Q&As. We got Mr. Jack Schwager himself, a.k.a. the creator of the legendary Market Wizard series, kind of the book series that kind of lured me to Chicago to become a market maker way back in the day. He's also doing a lot of other cool stuff. He has a company that will back independent traders called Fund Seeder. So a lot of cool stuff. But, you probably know him most from the Market Wizard series. So if you guys want to get at him, have questions for him, all sorts of cool stuff, theoptionsinsider.com/pro is the place to go. That'll be popping off next week, next Tuesday. So look forward to that. I'm looking forward to a great episode of Options Bootcamp, and joining me to have some bootcamp drill instructor fun, none other than the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the program, or should I still be calling you the Pizza Man? How are we rolling with this?
Oh, man, I'm good either way, I guess.
All right, and we're all good as we keep on rolling. Watching before we get there, before we do that, Mr. P, it's been a crazy topsy-turvy week since the last time we chatted. We saw markets rallying for a while, vol coming off. Last few sessions, not so much. Vol market selling off a bit, selling off more today. Vol creeping back up. Also on the crypto front, we saw just annihilation out there, 10% sell-offs and plus. I know you're not huge on the crypto, but I know a lot of people have been intrigued by that as well, just from a pure vol perspective. What's been lighting up your tape over there at MTM since the last time we chatted, sir?
Well, looking at a lot of things, looking at the VIX, which is a little more elevated than last time we talked, was a little bit more elevated a couple hours before we're talking today. Looking at the PE ratio of the S&P 500, which is above 30, which is generally considered reasonably high historically. And then just looking at some intermittent opportunities, particularly some of these short squeeze opportunities. And there's some interesting ones. Root, which I talked about I believe I talked about last time. If not, I was talking about it on Twitter briefly a week or two ago. That one's up 10% today. There looks to be a little bit more interest from what I pointed out last time as far as call buyers go. Being up 10% is reasonably significant, I would say. And it's exciting. It's exciting when you see opportunities like this.
It is exciting. If you're excited by all things meme stock, listeners, then get on out there. We posted live right before the show, a little late this week, obviously, because we were off on Monday for the Labor Day holiday. Usually that's when we post our question of the week. You can get at it right now if you're listening live. Just went live right before showtime, of course. If you're listening after the fact, as I know many of you do, it'll be live throughout the rest of this week as well. Head on over there to @options. Make your voice heard. Our question of the week, very simple. And I've seen a lot of hot meme stocks exploding onto the radar these days. Quite simply, which of these names are lighting up your options trading account? We gave you 4 of the hot kind of recent meme names that have on everybody's brain. So, of course, we got Support. We've got Any. We've got CCJ, a.k.a. the hot uranium name out of Canada there. And we've got good old Clove out there as well, Clover Health. So those are the 4 choices. Of course, there's a lot of people that are trading. So if you don't see your favorite there, hit us up. Reply DM with your suggestions, including, I had a feeling some folks were going to say this, including Bicyclist, almost right after we posted this, wrote back to say, I have them all. I expect more than a few of you might be saying that as we keep on rolling right on into your basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in, prepare to learn. Yes, sir.
All right, everybody, welcome to your basic training. Of course, a portion of the show, we take some options concept, usually a basic concept or strategy or technique, and explain what it is, how you can utilize it, how it impacts your options trading and indeed your portfolio. Today's topic inspired by kind of a recent wave of questions we've received around weeklies, including a couple like this one here from Mackie. Mackie said, Olo, OBC. Well, Olo, Mackie. He says, I've heard you two say that Expiration Friday has become an obsolete concept with the rise of the weeklies. What other impacts have weekly options had on the options market? Thanks and much love. Oh, he has an addendum. He says, P.S. I'm planning to join the secret club soon once I get set up in my new place. Oh, well, cool. We'll look forward to seeing you there in our live stream for some of our upcoming boot camps here. And, of course, for our awesome pro Q&As and the options oddities and all the other cool stuff that we have going on there in the secret club. So you know where to go, Mr. Mackey, theoptionsider.com/pro. And we'll see you in there. It's going to be exciting for you and for everyone in there. It's just a fun community. People are pretty welcoming in there. And we also had another one from Tim who wants to know, is it easier or harder for a stock to pin during a weekly expiration versus the standard monthly? I think we'll get to that in a little bit. Let's start with the initial question because it got me thinking, Dan, weeklies, so much of the paper these days, if you're talking equity options in particular, you can't really discuss them in any meaningful detail without talking about the weeklies. They are that big a part of the picture right now. But that, of course, wasn't always the case. We'll get to some of the history in a second. Let's just start really quickly. Top of mind for you, Dan, when you think of weeklies, what are your thoughts on them and maybe some of the impacts you think they've had on the overall options market?
Basically, I mean, look, if I had to put it into one word, Mark, I would say opportunity. Opportunity is the word. Because with options, the more choices or the more options that you have, the better it is. And there's so many times when I'm going, when I used to go through an option chain and I'd be like, oh man, there's just too much time here to put on this trade because I feel like it's a short-term opportunity and, 3.5 weeks to hold a position, or whatever is just too long, or I'm not collecting enough data or whatever. And so just having those extra choices to really hone in. And I always like to say to optimize your Greeks, like, hey, I want a bigger theta, so I'll go a little shorter term, or I want more time for it to play out, or I want more Vega exposure, less Vega exposure. So, it just gives you more choices. So for the individual, I think that that's the case. For the market as a whole, what I think part of the case is that it creates a more robust marketplace. Because if there's, like 50 contracts listed on a single stock, right? 25 calls, 25 puts divided into 5 months, 5 series each. If you add an extra 20 different series to that, 20 different options to trade, it doesn't just add 20 different things that can be traded. Like there's arbitrage that goes on between those, where if one's cheap and one's expensive, somebody will put on a spread, and there just ends up being more trading, which means more liquidity, which means a more fair market. And that's just better for everybody.
It is better for everybody indeed. Of course, it wasn't always the case that Weeklies were this big player in the world of options. In fact, they weren't really that big of a story until not that long ago. It wasn't an overnight success. It wasn't even really a guaranteed success that Weeklies were going to become this big thing. I remember this first foray into Weeklies. It was back in 2005. This was pre-Options Insider. We didn't launch until 2007. I was still, back then, I had left the trading floor. I was kind of just trading on my own. I also had my column out there for Traders Magazine, where I was writing about various developments in the world of options every month. And I was writing back then about Weeklies and kind of some of the opportunities they posed. At the time, they were predominantly considered a way to allow people to come in and hedge around specific events. That was kind of the initial use case for them. That was what SIBO and others told me back in the day when they were first being listed. Of course, since then, you've heard other explanations. There was some data coming out of SIBO that saw a lot of the volume went up in the final 2 weeks of an options lifespan. So they thought that would be a good place to have a product. Probably a little bit of column A, a little bit of column B as to why they launched these. They launched them back in 2005, I believe it was around October timeframe. And it was a SIBO. So of course they're going to do it on their big proprietary products, SPX, and at the time, OEX, which was the S&P 100. Not really that big of a deal anymore, but it was a big deal back then. You'll notice I didn't say VIX. And if that was today, certainly they would have launched it with VIX. But back then, 2005, there weren't any tradable options. I do believe the futures had listed. I think they launched around 2004. There were no tradable VIX options yet, so they couldn't list a weekly on the VIX. Thus, only SPX and the OEX. And it kind of came and went with a bit of a whimper. It didn't really make much impact on the overall options market at all. And you could probably guess why. It was in the S and the O. That was kind of it. So for the lion's share of the audience out there, they weren't really that relevant for you. And a lot of big institutions didn't really have a lot of demand for the weeklies, at least back then. So they kind of went the way of the dodo. And everyone thought that was kind of it. And it wasn't until really a little bit, just about the last decade or so, really, right around 2010, when everyone decided to try this experiment again. It was back middle of, I think, 2010, around June or so, when SIBO came back and decided, hey, they're going to do it again this time. This time with some products you folks out there in the retail world might actually care about. So we had SPY. That was a newer addition to the multi-listed options market back then. So that's a big one, much more relevant for most of you than SPX. They had the Qs. So people playing on the NASDAQ, the diamonds out there in the Dow, and IWM for the small cap folks out there. And that's kind of where it really started kicking off. And then a few weeks later, they added some actual single names. So they got out into Bank of America, Apple, a name you may have heard of. And even back then was a pretty hot name out there. And then, of course, Citigroup. And then, weirdly enough, BP. That was the other one that they listed. So again, kind of an interesting slice of the market back in 2010 versus today. I think you could obviously assume there would be some different names if they listed them for the first time right now. They kind of tweaked them a little bit that same month in July. They tweaked them. They used to list on a Friday and expire on a Friday. They decided that wasn't ideal. They wanted them list on a Thursday and then expire the Friday of the following week. So they tweaked them then. And then they started doing a little bit more paper. They added more names afterwards. So names you guys like, GLD, of course, Google, a few others out there, XLF. And that's when we started to see the worm really start to turn in the weekly expiration game. All of a sudden, these things were on products you heard about, that you were interested in, that you traded. And that gets back to the initial use case that they were created for, too, which is, especially in the single names, it allowed you to come in and speculate on or hedge against very, very minute events. You can come in and hedge a single earnings announcement if you wanted. You didn't have to buy the whole month's worth of premium if you just wanted to trade around a specific event. So that was how they were initially envisioned, how they were initially rolled out. Of course, what happened, interestingly enough, was almost exactly the opposite. People saw these things and said, man, they decay pretty darn quick. I'm going to start selling these things. In fact, I can remember in the early days of Weeklies, I was down at the OIC conference, and I was sitting next to Larry McMillan, of all people. He was receiving his Lifetime Achievement Award at the time, and he just couldn't stop the entire dinner. He just couldn't stop telling me about how amazing Weeklies were and how much decay was in there. And so Larry McMillan was blasting away on these things early on when they first were listed. And so it was a very weird, a very crazy time. I'm not sure if you remember those early days, Dan, but I mean, the decay curve was off the charts. People were crushing these things. What were your thoughts about Weeklies and kind of those early days when the second the bell rang and it was listed, it was kind of like ringing the bell at the dog track, right? And they were just out of the gate chasing the decay all the way to zero, sir.
Yeah, you know what? It was really kind of cool and really exciting. At the time, the exchange had brought me in to teach Weeklies, among a couple of other things, to retail and institutional traders. And so I was kind of on the front lines of this, rolling it out. I was there actually right before they even named them, and they had some other names that they had considered. One was Quickies, but that was very quickly had the kibosh put on it.
Yeah, I'd heard that rumor too. That would have been interesting if they had launched with that one.
Yeah. No, that's definitely a true story. And yeah, it was pretty exciting because like we had to sit and think and figure it out. And I remember playing with the pricing model and being like, wow, like if you sell 4 of these in a row that are near the money, that's way better than selling it at the money in a lot of cases. There's something really powerful about this. And, I just remember thinking it was exciting. And when the SIBO would fly me around the world to teach, again, retail and institutional people this, they were really excited too. And, the excitement never stopped because it's just a very, very practical thing. And they did what any other business in the world is supposed to do. They provided more value to their customers by doing it, by rolling it out.
And so the initial question, about expiration Friday going away, obviously it hasn't technically gone away. Every Friday there is an expiration now. So that alone has kind of taken some of the bloom off the rose. It used to be, when I first walked on the floor of the SIBO, and I'm sure for Dan as well, it was a special event. It was a once a month event. You didn't really have VIX back then, so there were no kind of midweek VIX expirations. You still have the index expiring, but outside of that, it was really predominantly Friday was the day. And that was when everything kind of came to a head. There were people out there who kind of just lived and died around that event. You'd only see them on the trading floor. On expiration Friday, they came in and tried to trade things. There were a lot of mispricing, shall we say, going on the expiration Friday. They'd come in and try to take advantage of those things we've talked about in the past called conversion reversals and other different things. They would go from pit to pit, try to find those mispriced items and trade them as quick as they could and get them locked in. And the stock bouncing around, you can actually lock in some profits if you were pretty quick. You could also tell very easily when you walked on the floor on expiration Friday, instantly what kind of position, what kind of trader people were. Long premium guys were there, and they were probably pretty normal, maybe a little intent, but nothing crazy. The short premium guys were usually short a ton. That's how they made their money. And it was all coming home to roost that day. And especially if you were ticking around the strike or some strikes that they were short, you could see those guys sweating profusely, popping tums all day long. Was that your takeaway as well, Dan? You could always tell right away, just visually, who was short and who was long going into expiration Friday?
Yeah, no, the guys who were long vol, just like kind of quiet, prepared and worried about the slow, painful death throughout the day. And the short guys just like nervous, eating the tums, hoping for not a big move. And yeah, those were the days, weren't they?
They were indeed. Of course, we have since then seen expiration expand to multiple days. It started really out in the index products, adding midweek expirations. And now we almost, not quite there yet, but we're almost effectively have an expiration pretty much every day of the week. And that has really stolen the thunder away from expiration Friday now, where if you look at it hard enough, you can find an option product that's going out pretty much every day of the week. And that has, again, kind of mitigated this impact of this one big day, this expiration Friday. Going back to the initial question of the impact of it, what is the impact of these weeklies? Well, it's done a lot. Obviously, it's brought a lot of people to the table. As Dan said, it opened the door. It was an opportunity for people who didn't want to have to shell out the premium for a whole month. They wanted to trade around a very specific thing. That made it a lot easier, more cost effective for them to do so. Made a much easier and lower barrier to entry to the options market. I think we're all seeing the benefits of that right now. As a result, it also migrated a lot of liquidity from the front month option, which used to be where most of the paper went up, to now a good chunk of most of these names you look at that have listed weeklies. A good chunk of that volume is going up in the weeklies right now. For example, just today, I went and just pulled up the biggest name on the block in single names. I pulled up Apple just to see what was going on out there today from an expiration perspective. And as coming to Showtime, about 1.2 million contracts had traded. So that is no small amount. Apple doing some paper out there today. And I stopped counting after 700,000, but over 700,000 of that 1.2 million, so well north of 60%, it went on from there, obviously, were expiring. A good chunk of those were expiring in the next couple of days on the 10th. And then if you add in next week, so pretty much 9 days, you had pretty much over 700,000 of that 1.2 million. Now, Apple's a little bit of a weird case because recently, last couple of weeks, we've seen an explosion of very near-dated paper out there. Also, we have regular monthly expiration coming up, which is going to kind of compound that a little bit as well. But in general, north of 60% on a huge, the most active, the most liquid single name out there. That gives you some idea of just how important and how popular these weeklies have become. Now, Dan, with all this volume migrating out of the monthly options and into a broad swath of weeklies, you usually have pretty much week 1, 2, 3, and then the monthly. So you have pretty much a strip of options now you can trade versus just the regular monthlies. Obviously, it's going to have an impact on your Greeks, your theta, and everything else. What are you noticing from that perspective, sir?
Well, I mean, I think this kind of ties into what I said, just having more choices, look, one of the biggest things that I teach all of our students is like the reason why you have the potential to make so much money with options is because you can really sort of cultivate your risk reward profile to exactly what you want it to be. And if you just have the monthlies, well, you can do things like, okay, well, I can buy a call, or I can buy a call spread, or I can sell a put spread, and I can play around with the strikes, and there's a fair amount of freedom there. But once you add in that extra level, like more to the strip, like you're saying, then you can really carve, just lob off a lot of the disadvantages to the best strategy you can come up with, and add more advantages to the best strategy that you can come up with. And I mean, look, man, to me, that is the single most important thing. It's probably the most important thing with trading. I mean, there have been so many times that people have come to me and they're like, you know what, I'm pretty good with reading charts and that, but I still lose money trading options. And it always comes down to just not constructing the ideal way to trade it. And it just makes it so much darn easier to do that.
It does indeed. I mentioned earlier, the impact of some of the weeklies and the difference between expiration Friday once a month and, of course, the now weekly expiration. So many people are trading in these weeklies, which is effectively, the high theta zone for these options. If you look at the traditional monthly option, it's when it gets into the last couple of weeks that theta really kicks into high gear, and we start seeing, the exponential type of decay. In fact, when I first walked on the floor of the SIBO, getting into expiration Friday, a lot of the analytics packages back then really couldn't handle. They couldn't model gamma and theta going into expiration because it just got exponential. They couldn't process anymore. So it would just spit out effectively nonsensical numbers to you for gamma and theta. So going into expiration Friday and throughout the day, you kind of had to throw out the numbers they were giving you for those, which obviously made it a little bit challenging when it came to, let's say, delta hedging your position. and things like that. These days, obviously, the analytics packages have improved. The computing power, the horsepower behind them have certainly improved. And of course, the weekly expirations, spreading them out across, multiple weeks as opposed to all in that one day, has changed things quite a bit. But we did see and still do see a lot of people just living their entire options lifespan in that very high decay zone. And it makes it interesting and or challenging for a lot of them out there. In fact, I mentioned earlier when these things first listed, it was kind of a horse race to just hit the bid as soon as the weekly options were listed. And then you pretty much were set it and forget it almost. You watch it decay to as close to zero as you could possibly get before you took it off and did it again the next week. In fact, it got so overdone in the early days of weeklies, the second wave of weeklies, really, that it got to the point where these things were kind of oversold heading into weekends and things. And so it got to the point where you could have some nice, very low risk, very low cost buying opportunities on weeklies, buying them heading into a long weekend or even a traditional weekend and then selling them out that subsequent Monday. Usually you got money to do it and you had a free kind of swing at the bat over the weekend. So it made it interesting from that perspective out there. But yeah, in terms of weeklies and everyone trading in the weeklies now and the impact of it, everyone out there is just living in this high decay environment now, which wasn't really the case. Most people out there were trading the monthlies. They had some time. Obviously, they were decaying, but they had some time before they kicked into that really high theta zone where so many people are living now. And, Dan, as the guy who wrote the book on the Greeks, and I'm sure a lot of the people coming to you now there at MTM are doing exactly that. They're living in the weeklies. They're living pretty much where decay is rampant. How has that impacted, what you're counseling them in terms of what they're doing and also what they're trading out there?
Well, it's the thing about theta being higher in the shorter term options, like that's something that we all learn once we get to a certain level of understanding. But I've really observed, I would say really just over the past 2 to 4 weeks, a really interesting and surprising phenomenon. As many of you know, one of the things that Market Taker is really known for is for trading earnings. And a lot of that trading earnings is selling volatility going into earnings, which I think we've talked about in previous shows. We can talk about it in the future. But sometimes when the volatility is not high enough going into earnings, then what we want to do is we want to actually buy options and we want to specifically buy straddles. Now that's probably like less than 5% of the time, although this quarter it's been a lot higher. And so I would look at the different expirations of options that had weeklies, and intuitively you would think that the further back expirations, the ones that expire in 3, 4, 5 weeks that had way lower implied volatilities would model out to be much better straddle trades. Like that's totally intuitive. But when you actually model it out, including the anticipated volatility crush, it was almost always better to buy the extremely high implied volatility frontist, if that's a word, frontist most options to buy the straddle, the ones that were like expired, a day or 2 or 3 immediately following earnings. Totally counterintuitive because their implied volatility is so high, they do have the highest theta, but like the real magic there is that they're cheap, right? Like they're expensive. They're arguably overpriced when it comes to the implied volatility level, which is what I generally care about, but they just have a lower dollar value. And so they end up modeling out as really great straddles under the right set of circumstances.
I'm just like calling you Dan the Straddle Man. Forget about Pizza Man. It's like the 3rd week in a row you've been extolling the virtues of straddles, sir. You've been lured to the dark side.
It's been a good couple of weeks for them.
I like that. The frontist most options. I'm gonna have to borrow that. I'm going to start trading the frontist most options out there. Yeah, we could go on for a lot more about the impact of weeklies, but just bear that in mind. You are playing in kind of that high decay zone. So it's kind of thing where we've seen it a lot now, a lot of these meme names. In most scenarios, if you're buying premium, you want that move to happen pretty quick. You need to get that bang for your buck before the decay kicks in. Of course, now that everybody's playing in the weeklies, that time scale has accelerated. You can't wait around much anymore. Look at all the trades we profile on our option block segment, or of course, the out block segment. And then, of course, in the options oddities, we go into a lot more detail there for the pro members there. And you can see a lot of these trades have sometimes just a session or two to really work out before they just get annihilated from a decay perspective. So that has certainly made things a little bit more challenging sometimes for a lot of people out there who like to come in and swing for the fences on a lot of these out of the money options. You have a very limited time frame. Even if your option's going out in 2 weeks, you only really have a couple of sessions before the decay has already gone against you so aggressively that you're kind of digging out from a pretty steep hole already out there. Another thing to note out there, we mostly focus on equity options here on this show, but weeklies are not limited by any means to just the weeklies. In fact, you listen to our TWIFO show, This Week in Futures Options, you'll know that there are tons of near dated contracts out there on the CME products, of course, on all of the listed major equity indices out there. So, your E-mini, your NASDAQ, all that stuff, S&P, they all have weeklies. In fact, whenever we do that show, I hate breaking down the weeklies on there because usually a massive percentage, 25, 30+%, if not more, of the volume for that week went up in a contract that's going out in a day, if not within a week. So, yeah, there's a lot of near dated paper going up out there in the futures, too. They've, of course, compounded it, tried to make it even more attractive to retail by adding mini and micro contracts. So there's bite size and a lot of different expirations. You're not just limited to your Apples and your Facebooks and your meme stocks. You can go out there into the world of the equity indices. Then if you want to branch farther out into things like, let's say, crude oil or even corn or other places, there are places you can go to find the weeklies out there as well. We've got some more questions coming in here from the live chat. I want to touch on this one really quickly. The second one we had here first, and I'll get some of the live folks. Tim asked Dan, and again, people obviously have this on the brain right now, the gamma impact around expiration and pinning. This is another kind of variation on that question we've answered a couple of times now. Tim wants to know, is it easier or harder for a stock to pin during the weekly expiration versus the standard monthly expiration? So I'm trying to think, Dan. I don't think we've been asked this flavor of the question before. So it's an interesting thought question. What do you have to say here for Tim wants to know, you're looking at a regular monthly expiration versus the weekly expiration. Is one easier to pin than the other, sir?
You know what? That's a really interesting question. I have not seen like a formal study on that, but intuitively, and I'm pretty sure that the answer would be it's more likely to pin via the monthly expiration as opposed to the weekly, just because indirectly it has a lot to do with the open interest on earnings, or not earnings day, but on expiration day, because that's when the market makers, if they own a lot of options, they have this really high gamma, and this is only valid on expiration day of the expiring options. If they just own a ton of these options, if the stock goes a little above the strike, they've got to sell a bunch of stock that forces the stock down. And if it's a little below the strike, they got to buy a bunch of stock that forces the stock up. And so, yeah, I mean, you tend to see higher open interest in the monthlies, and that's simply because they've been around longer. They've just had more people trading them for a longer period of time. And not in all names, but in a lot of stocks, they tend to have more liquidity. They tend to have tighter markets. And so you tend to see more trading where there's a tighter bid-ask spread. So yeah, answer is probably the monthlies with a 95% confidence interval.
Yeah, I mean, I haven't seen any data on this either, but if I had to intuitively guess, and we do because that's what the show is about, I would probably go that same way. I would think the monthlies for the reasons you just described. The OI is probably going to be higher. We just said there's a lot of paper going up in the weeklies, and if you add up all the weeklies together, they can outstrip the monthly from a total OI perspective. But week to week versus the monthly tends to be more OI in the monthly out there. So I would tend to think it probably would be in the monthlies, but again, to my knowledge, I don't think anyone has studied this. So an interesting variation on the question. Got some live questions coming in from the Secret Handshake Club folks out there. First off, folks liked your idea of the Quickies there, Dan. Nichols says, damn, Quickies would have been so much cooler. I don't know if it'd be cooler, but maybe. And then Mr. Unlimited says, I bet you if they called them Quickies, people have had said, quote, quick way to lose your money when they buy calls or puts. So maybe from that perspective, outside of the obvious reasons why it wouldn't be good, Dan, maybe from that perspective, it was good they didn't go with Quickies as well.
Yeah. Yeah, it's all in the marketing, isn't it?
Speaking of marketing, Nichols also wants to know, is it spelled Weeklies, Lies, or Weeklies, Lys? You know, this one drives me crazy. Nichols, it's one of these stupid branding things. I blame the SIBO for this because they're the ones who kind of listed it. If you look at the SIBO's official marketing material about them, and the OCC and others have it spelled the same way, they are Weeklies, Weeklys, which to me is just nonsensical. It's so grammatically awful. I can't bring myself to do it. So when I write Weeklies, I default to Lies. That looks better. It makes more grammatical sense to me. I refuse to be sucked into this branding hole of Weeklys. I refuse to be grammatically incorrect just to support their branding. But that said, if you want it to be technically brand authentic, I suppose, it is Weeklys, even though to me that looks absolutely atrocious. So I still spell it Weeklies, Lies. I guess call it the old school guy in me. I don't know, but we already had some questions on. You got some good ones. We'll see if we can squeeze in a few more really quickly with a little bit of your mail call.
Mail call. Time to look at questions submitted by our listeners.
Well, first off, really quickly, Dan, do you have anything to add on the great Weeklies versus Weeklies debate, sir?
Well, yeah, one thing, it's pretty funny. That was when, like I said, those were rolling out just as I left the trading floor when the SIBO had me come and teach those. And so I was writing a lot of material on it. And I'd never really written before. And Kathleen, who is my wife and also our student liaison now, but back then she had a different career as a copy editor, which she is by trade, and she was for like 20 years. And the really funny thing is, like, I would have her edit my articles because, I was kind of new to writing at that point, 20 years ago. And she'd be like, no, you spelled Weeklies wrong. I'm like, no, you're supposed to spell like that. She's like, no one would spell it like that. It's not spelled that way. I'm like, no, it really is. She's like, okay.
Your wife, I've always said she's a very smart person, and you could tell right there. Her instincts were correct. Damn the marketing. Spell it correctly. Curse you, SIBO, for stomping all over grammar. But let's keep on rolling out here. You guys are rolling with a question of the week last week. Let's just pay it off really quickly, the results. We asked you last week, which level will we hit first? VIX of 13, Bitcoin of 60,000. We were flirting with that, not that far away, about 8,000 away until the big sell-off yesterday. S&P 4750 or gold at 2,000. You guys chose S&P of 4750 with about 42% of the vote, followed by about 32% for Bitcoin 60K, nearly 18% for a VIX of 13, and only about 9% for gold of 2,000. We also, because it was hot and heavy during the show last week, we put out a flash poll, asked you guys, PayPal's coming. Are you guys intrigued to use PayPal as your broker? Pretty much yes or no, but we gave you two different flavors of it. And the answer was no, I'm pleased with my broker. I'm not going to switch to PayPal. One with about 45.5% of the vote, followed by 27.3% for no, I'm not going to switch because I just don't like PayPal. Only yes, I like PayPal. I'm thinking about switching was only 25%. And yes, I'm thinking about switching to PayPal because I'm not happy with my broker. Only 2.3%. A lot of you had thoughts on this. J3 Dingle, regular listener, said, oh, wow, PayPal or interactive brokers. That's a very tough choice. I think he was being sarcastic there. We have this one from Dan, I think your favorite handle here, Filthy McNasty. By the way, in case you're thinking about using that, Dan, that is Filthy McNasty TM. So you'll have to license it from him if you want to use that handle, Dan.
Damn. I guess I got to change my old Hotmail email address.
I can see you changing it as we speak, but nope. You got to pay the licensing rights. Filthy McNasty TM says people don't like PayPal as it stands today, but even Taco Bell got a breakfast menu. #recession. So I guess he's saying that people could change their minds if the fees are right, maybe, or if the execution of the platform is better. So I guess he's saying he's not into it, but he could be into it if they had a breakfast menu. So there you go. And then Chuck Harvey says they can't keep up with tools like Toss Also, their customer service is super anti-customer. Yeah, that's been a problem and a pain point people have had with PayPal for a long time. They're not exactly very friendly to the customer. And you got to have that if you're a broker. You got to have good customer service. Unless you're IB. You can kind of get away with it if you're IB, I guess. Really quickly, some more comments. We had that kind of epic screed on the show last week. That kind of meme-loving trader was super unhappy with Dan and I, said we love Citadel, all that stuff. A lot of you responded to that. Amy T chimed in, says, hey guys, I just wanted to chime in with some love for all things boot camp. Kudos for reading that ridiculous manifesto from that Jason guy on the last episode. I'm always happy when shows feature comments other than adoration from their fans. It shows integrity. Oh, well, thank you. But that guy was way, all caps, way off base. He's clearly just another ape talking up his book of meme stocks. Those guys can't handle any criticism of their positions. If he thinks you guys are in the pocket of Citadel, then he's obviously crazy and hasn't listened to a single show on Mark's network. He's the measuring stick for integrity in the options market. Wow. Thank you. More people in the business should aspire to be like him, not the other way around. Sorry for blowing so much smoke, but I figured you might need it after that ridiculous diatribe. Well, thank you. That's very nice of you, Amy, and we do inspire to be that yardstick. You know, who knows if we hit it all the time, but we try. We try to be that kind of yardstick for integrity out there in the world of options. And Omasta just says, F that ape, OBC for life. So there you go, Dan. We got some lovers out there with the haters. There you go. There you go.
Oh, man, that is awesome. Amy, that is such nice comments, to Mark. But, you got to cool with that, too. It's going to go to his head.
My head is already quite big, literally, right now. I have to buy crazy glasses whenever I get them. But thank you for that. Nonetheless, Amy and everybody else who wrote in. All right, that music means we got to get out of here for this week. Keep those questions, those comments, those pearls of wisdom coming. If you have a topic you want us to discuss here on the show, you can see sometimes your topics take us in interesting directions here on the show. If you have more questions about weeklies and how they perform, how they've impacted the overall options market, again, there's so much to get to just with that topic. We kind of only had a chance to scratch the surface of it. I have a feeling we'll come back to it. Remember, if you want to get more in your ear holes throughout the week, you want to get some exclusive shows and some great education, theoptionsinsider.com/pro is the place to go to learn more and to join the awesome community in there in the old live chat. Before we go, Mr. P, if folks are intrigued, they want to hit you up to talk about weeklies, they want to talk about your new straddle love, or anything else, where should they go? What should they do?
Happy to chat with any of our listeners. Just make your way over to markettaker.com, 2 T's in a row, and just go to our contact us page. And if you have a question, comment, need help with anything, I'd be glad to chat.
There we go. Market Taker, 2 T's. Leave on the second T for Theta over there at markettaker.com. And of course, we'll be back later today. He's on demand. Brian, it's hard to get Brian to do the live. I wish, but we'll get him back live again. Maybe I'll huddle up with him again one of these days and get him back to do the live. So you'll get your dose of OPR, your Options Playbook Radio today. Subscribe to the network. You'll get it, of course. If you subscribe to OPR, you'll get it as well. And if you listen into Options Bootcamp, you really should be listening to Options Playbook Radio as well. They're very much a sister show to this program. It will really give you the 1-2 punch for education that's coming later today, wherever you're subscribed on demand. Of course, back throughout the rest of the week tomorrow, the double dose of TWIFO, as well as episode 2 of the Option Block. Friday, we got volatility views. And then after that, for you pro listeners, we've got Options Oddities. Then back again next Education Wednesday with another episode of Options Bootcamp. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.